Trading swing trading for a very longer time now. This is my 8 years experience of trading the swing. Okay guys, so I got a lot of experience and I've made a whole lot of money trading the swing strategy. You can see I've made a lot of money. I've made $10,000. I've even made about 5,000. Even I've grown smaller accounts into thousands and millions of dollars just with my swing trading strategy that really works well. So in this video guys, I'm going to be making it very easy for you guys. Even if you're a beginner, you are start your journey on the swing trading, I'm going to give you every details you need to know. Okay, I'm going to break it down. I'm going to expose the secrets of what I do and the things you need to look out for, my concept of swing trading, the time frames which I also use in my swing trading strategy. I'm going to be sharing all of these things for you guys, okay, because I want you guys to also make money as well and grow in this industry. So if you are looking for opportunities like this, what are you waiting for? Don't go anywhere. Watch this video. If you have been looking for swing trading, you want to know swing trading, watch this video. I'm going to simplify everything for you. So this video is what you need. Don't go anywhere. Watch this video to the end. You will come back and thank me guys, okay, for sharing this concept with you. So don't go anywhere guys. Stay to the end of this video and please don't forget to like, subscribe and share this video. So let's get started guys. Welcome my beautiful people. So we are going to be talking about swing trading. Okay, so we are going to be looking at the first concept, which is what is swing trading and the time frames that is needed for swing trading. So the first thing is the concept of swing trading. Okay, so like I said in this video, I'm going to be making sure that you understand all these things because these are the things I use and they have actually been making huge money for me. So I'm going to be also teaching you guys these very concepts step by step so you understand them. So even if you're a beginner trader that you are aspiring to go on a swing trading, this concept is going to be very easy for you. So make sure you stay tuned on this video. Don't go anywhere so you get the full benefit of this. Now, we start with what is swing trading. Swing trading is the ability to hold trades for a very long time. Okay, so for you to hold trades for a very long time, that is what we tend to call as what swing trading. Sometimes it can be for days and weeks. Okay, so this is what I usually do. So I tend to hold trades for a longer time. So I specialize on holding trades. Okay, so like I told you guys, I've gotten experience on swing trading. So it's actually been my 8 years in trading the swing trading concept. So that is why I want to show you guys practically so you are going to see everything. Okay, now the time frame needed for this swing trading, we have monthly and weekly time frame. Now the monthly and weekly time frame, what do you do? These time frames, remember I specifically stated there time frame for swing trading. So it's not a time frame for day trader, it is not for also scalpers. If you fall into these two categories, please, this is not for you. Okay, it's majorly for swing traders. Now these are the time frames you need. Number one, the monthly and the weekly time frame. Now what do you do on the monthly and weekly time frame? The monthly and weekly time frame is the time frame you use to check the trend of the market. Okay, checking the overall trend of the market, checking what the market is doing, checking what price is doing. Okay, starting from the monthly, weekly and the rest. Now the daily time frame, when you come to daily time frame, what do you do on the daily time frame? Your daily time frame is for marking your key levels. Okay, now that is why you see I put it there for what key levels, your point of interest and the rest. The 4 hours time frame, what do you do on the 4 hours? The 4 hours time frame is for your entry. Okay, so we use the 4 hours to enter the market. That is the time frame I use with your confirmation, which I'm going to be showing you guys practically on this very video. Okay, now let's start with the time frames. Now I've explained the concept of swing trading. Now let me show you how you can use all these things I said, how you can apply them. All right, now let's go to the monthly time frame. So first thing first, we'll look at our monthly time frame. Because why I said so is so that you can catch the big move of the market, because it is from the monthly time frame and the weekly time frame. It's from these higher time frames that market always starts a trend. It's either it's starting a trend on that monthly time frame, or there is a reversal or a continuation. So two things, all these things I said, it is from there that all these things always starts from. So market does not start moving from the lower time frame. That is why you hear a lot of traders telling you follow the trend. It's because it is from there. It is when you follow the trend, that is when you make money, and it is from those higher time frames. That is where these big boys always tend to move the market from. I got this secret. Trust me, guys. I've been making a whole lot of money. I've been following the trend and making money. Because then I don't understand these things. When they tell me follow the trend is your friend. I did not know that secret. But until I found out that you can only understand these things when you follow the higher time frame. Okay. And that is what I did. It's from knowing these secrets, okay? So from the monthly time frame, daily, and the 4 hours time frame. So like I said, no man, I told you that the 4 hours time frame is for entry. The daily, I use the daily time frames for marking of my key levels. Okay. Now let me show you guys how we are going to do that. So the first thing first, we are coming on the monthly time frame. So what are we going to be looking at on the monthly time frame? Now, this monthly time frame, what we are looking at for on the monthly time frame is the trend of the market. Okay, sorry, the trend of the market. So that is what we're going to be looking at on the monthly time frame. So now, if we check here, what do we have as the trend? Sorry for these lines. I've been actually doing analysis on gold. So if we check here, let me delete all these lines. Okay, let me delete them. So if you check here closely, guys, you actually find out that gold has actually been on a bullish trend for a very long time now. It has been buying massively. Okay, it has been on a massive buy for a very longer time now. So if you check, this is the movement of gold. This is the overall trend of gold. So you see that gold is actually giving us a bullish move. Now we have figured out what is going on, because if you look at this, you find that these are bullish candle movements. Okay, these are bullish candle movements. We can see the move here. So remember, looking at the time frames, looking at the trend, I mean, on the monthly and weekly. That's the first thing first principle. Now let's go to weekly time frame. Let's see if we get the same information. Okay, now we switch down to weekly. Okay, now we switch down to weekly. Now, is weekly telling us the same story? Yes, I told you guys that make sure that your trend, if you are looking at a market or you want to find entry on the market, make sure that the two time frames are telling you the same thing, not contradicting each other. That is, the weekly must tell you it's a buy, monthly must tell you it's a buy. When you see one of the time frames telling you sell, don't do anything. Make sure you wait. That is how we enter. That is how we catch the market move. Because, of course, you know, in a market settings like this, the higher time frames always have the overall say. Okay, not the lower time frame. I repeat, the higher time frames always have the overall say. That is why you hear traders tell you analyze the market from the higher time frame. Now, this is what we find out, that the market is also buying on the weekly time frame. Okay, so we are able to see this, that the market is giving us a buy on the monthly, on the weekly. Now let's go to daily time frame. Let's go to daily. Okay, now back to daily. Now what do we do on daily time frame? Okay, now when we come to daily charts, when we come to the daily time frame, what do we look at for on the daily? On the daily time frame, we tend to mark out our key levels on the daily. Okay, marking of key levels on the daily time frame. Now if you look at here, On the daily, I mark this key level. Number one, this is my key level here on the daily. Okay, this is a key level. Now, what are my key levels? My key levels I use is support and resistance, trend line, other blocks, fair value gap, and that is just it. Okay, now if you look at here, we have a breaker block which is resistance here. Okay, this level here, there was a resistance. Now price might come back to that level, and we have another other block close to it, or before it rather. So before that level we have another block here. Okay, so you can see here that there's another block here. So price might want to come back to this other block or this level here to give us a buy. Well, so once price drop here, we might get a buy, or drop to this level, we might also get a buy. Okay, so these are my key levels I am marking. And if you look here again, we also have an FEG on daily. So you can see this is my daily daily fair value gap. Okay, so now we expect price to drop to this. If either drop from here to this point and give us a buy, or this level, or this other fair value gap level here as well. And now if you look here again, we also have this other block which I marked. This was where I took my trade that made me a whole lot of money. And even from this point, so these are levels which I'm going to show you what I did on the lower time frames. Okay, so we are marking our key levels, and you can see this one again. This is another key level which price has not touched for a very long time. Okay, so price has not come to this point, so maybe later in the future market or price might touch that level. Now let's go to the 4 hours. Okay, let's go to the 4 hours time frame. Now don't forget monthly and weekly checking of your trend, daily marking for your key levels, then the 4 hours you look for entry. So the 4 hours is one of my favorite entry time frames. So I don't go beyond using the 4 hour time frame. Okay, so this has actually been my favorite entry time frame. Okay, that's actually been my favorite entry time frame. So now let's look at what we have here. Okay, now if you look at the 4 hours, this place we marked here, firstly we have another block here. Okay, so which I said price might want to drop to this point, then drop to this point. Remember that our overall trend is a buy, so price I want to do drop to this point, then start the movement to the upside. And this place, sorry, okay, now this place again, which I also draw, you can see that there's a key level there too, which I drew it from the monthly, sorry, from the daily. Now if you notice, price might also want to come back to that place and give us a buy. All this level I marked a level which we're expecting a retracement for price to drop and give us a buy. Of course, I took my buy, which I showed you guys, but I've closed my trade. Okay, waiting for another entry again, which I've been holding for days. Okay, if you look at this place, there's another block here. Okay, 4 hours other block, and there's also a key level too there as well. Okay, so we can draw it all together. So for more confidence, now if you look here again, we find out that this was where I took my trade. Okay, I took my trade on this level too. That was second entry I took, and we find out, what do we see here? There's another block here, and on that thing again that you need to consider, candlestick confirmation for your entry. If you don't know candlestick confirmation, there will be a problem. So I love using the candlestick confirmation for my entry. And if you notice here, how did I find my entry here? Was I studied the move of this candle. Now I need to see bullish signals coming up. Okay, so the bullish signals, I need to spot them. So when I say bullish signal, those are the things that made me, or give me more confidence to take a trade, either bullish or depending on the trend. Okay, because this is a bullish trend, so you find out that I saw this bullish candle, which there was a rejection. You can see the rejection of price. So once I saw this rejection happening here, and I saw the next bullish candle that break out of this previous bullish candle, so I had to step in and plan my entry. Okay, many of you guys don't know how to plan your entry, so I plan my entry. Now putting the stop loss, because I don't like letting my stop loss to be tight. Now giving this a wider range, so for price to play out, because if you make it too tight, price might come to hit your stop loss and now go to your anticipated direction. So, and then after targeting my stop loss, then, and I said something now, if you are risking your trade, make sure you don't risk more than what you cannot afford to lose. Okay, risk only what you know that you can afford to lose. I've been saying that over and over and over again. Now, even if you are risking, make sure it's either 1% or 2% of your capital or your account. Now, if you look at this, now because it's a swing trade, then I tend to target the next move to the upside. Okay, so I tend to target the next move because it's a bullish market trend. So this was where I took my entry from, spotting and knowing what is happening, where the market is heading to. So then that is where I picked that made me about $10,000. I said it before. Then if you look at here again, I also picked my entry on this place, though I marked this one thinking that the price will come back to this place, but it did not. So now let me show you. Now if you look here, there's another block here. Okay, there is another block here. Now if you find out that on this other block here, before the other block was mitigated, we'll find out that price created an inducement. You can see, so there's an inducement here, faking out buyers trying to take out liquidity to the downside. Then after taking out liquidity, we saw this candle and this one that break past the previous candle. Now make sure you are seeing your candle confirmation pattern, and if you want to enter bullish or bearish, make sure that you are seeing sellers coming in. Okay, a full bullish candle or bearish candle engulfing your whatever candle pattern you know. Okay, now looking at this one here, so this is where after seeing this candle, okay, so after spotting out this candle here, then I entered from this point here. Okay, so that is where I entered to be sure. Okay, now then we target our risk to reward. Okay, so now my stop loss below this previous bullish candle. Then that is where I picked my first entry. Then I started moving with the trade. Okay, I started moving with the trade. Even when it was pulling, the market was pulling back. When it got to this point again, this is when I picked my second entry. Okay, and start moving with the market. Now, another thing you must know is learn to train your stop loss. Train your stop loss, because sometimes the market, yes, even if you're holding for a longer time, you just need to train your stop loss so that even when the market is going against you, you can, even when you hit your stop loss, you know you're not risking more. Okay, because if you leave your stop loss, for instance, you leave your stop loss at this particular place, the market is moving. It's moving. Now, there's every tendency that this market or price can come back and hit your stop loss. And you know, when it retraces coming to hit your stop loss, the losses will be higher than what you are supposed to lose. Okay, so it's better you train your stop loss. Let's say I train my stop loss to this point now, and let's say it hit my stop loss. Maybe I will not be risk, my losses will not be as much as letting it or letting price come back to your entry and not hit your stop loss. Okay, so that is why if you're a swing trader, I'm just showing you guys because these are the things we swing traders tend to face. Sometimes you see market, there will be a longer pullback. You'll be on a trade, the market will be hitting, there will be a massive pullback pulling you. You are still holding that trade. Sometimes price even come back, even we swing traders, because everything that has advantage will also have disadvantage. Sometimes we can even be on a very long trade, and before you know, you will just see a long pullback that will come back and pull you out, or take you out rather. So that is the disadvantage of all this. So in as much as swing trading is good, it also has its own disadvantage as well. Okay, so that is what we are also expecting, guys, and I've shown you guys every single thing or single steps that you need to follow Okay, you can watch this video again if you don't understand, and if you have questions regarding to this swing trading video, please drop them on the comment section. I'm going to attend to your question, or there's something that you don't understand clearly, let me know in the comment section, guys. I'll be there to attend to you live. And if you also find this video helpful, please give us a thumbs up, like this video, subscribe, and share it, because there are many people that actually need to watch this video so that they can understand how to trade, how to take long-term trade. Okay, so thank you so much, guys, for your support. I really appreciate, and I love you guys. Be expecting more video and content from me, okay, which is going to be mind-blowing. All right, so thank you so much, guys, and bye for now.